Hi, welcome to Market in a Minute. I don't know if you caught that fight on Friday, but that sure was a scam and a waste of time with Paul and Tyson. But the ladies were great. Inflation's running a little hot, and particularly for an overvalued market. So we're concerned about the trends of inflation. And we're wondering about SMCI's impact on NVIDIA, super microcomputer. As everybody probably knows, their auditor resigned. Might be a good spec because all the institutions had to bail out of it. And I'm sure the hedge funds are short in a big way. So any good news, that stock could spike quite a bit. RFK appointment has created some interesting buying opportunities. We're going to walk through that in a little bit. So the stock market update. NVIDIA reports Wednesday, and they are the biggest company in the world now, or maybe right behind Apple. Depends on where each stock is at the moment. But last time we got NVIDIA to be the largest company in the world, we had a nice correction. So there's clear visibility, though, into 2025 that AI infrastructure will continue to be strong. There was a rumor out last week that NVIDIA is having some revenue recognition issues. So it's not consistent with GAAP. Kind of hard to believe, though. SMCI is down about 85%. Their auditor resigned, probably for good reason. Clearly, probably some revenue recognition there. This is the third largest customer for NVIDIA. We're wondering if it's going to have any impact on NVIDIA's quarter or outlook. Technology is now 45% of the S&P 500. Now, we include back Amazon, Meta, Tesla, and Google into that. And so it's 33% without it. But those companies are clearly technology companies. So that's a huge portion of the S&P 500. It makes the S&P 500 more volatile and more dependent upon technology to continue. But yeah, as we all know, we know that the economy and the stock market are not the same thing. But we think the economy under Trump's policies will pick up, maybe after a little bit of a recession, but will pick up to be stronger without so much government spending. And we're going to see probably likely a multi-year rotation. So some of that technology exposure going into the rest of the markets. So at times, just keep this in mind, the markets can be extremely wrong. CPI coming in too hot, pushed the 10-year Treasury up to 4.5%. It's kind of concerning. That might be the high for the year, but it's kind of concerning. We have to keep a close eye on that because it could have a big impact on the overall market. Trump's nomination of RFK, not a surprise. We're surprised that the market kind of freaked out about it. So some of the food stocks and some of the healthcare stocks really pulled back on it, which is rather odd. So it's given us an opportunity there. And then we're seeing some tax loss selling probably likely already occurring. So just keep that in mind. And then the market is roughly 21.3 times next year's earnings. You can see here the market up close to 22 times, pull back a little bit now. So this is high. So we like to buy when it's low, to be a lot more aggressive when it's low. So it's kind of like being on a really high ladder. You move down a step, if you fall, you're still going to break your head, right? So even this little pullback doesn't amount to a whole lot. But if tech continues to be strong, and we're going to find out on Wednesday what the outlook is for NVIDIA, then the markets will likely continue to go higher. If not, we see probably a pullback coming in short order. So we're looking at buying great companies that like a few have done with the RFK nomination, that just fall in our lap, that there's so much emotion that it creates a nice opportunity. Now, SMCI, it's down a ton, and we don't know exactly what's going on there. This could be a great buying opportunity. So an auditor quitting with such disgust really makes us wonder what's happening with that company. The technicals, it's got kind of all playing out as we expected. So we had a pop after the election, the Trump pop, and then it's rolled over, kind of as we expected. we're expecting some more decline to occur, but again, it's going to depend upon what's happening with NVIDIA, we believe. So we could see a really nice significant pullback down to around the 200-day moving average if all doesn't go well with the NVIDIA quarter. The S&P 500 is pulled back to the 20-day and looks like it's trying to hold there. The oscillator is starting to correct this overbought condition, overbought, pulling back. We like to be more aggressive when the markets are oversold. So we're not close to that yet. We're kind of probably a third or halfway through this condition. We're down 4% on the S&P. We'd like to see 8 to 12 before we really get too excited about everything, as long as that 10-year Treasury holds in there. So RFK is providing us some opportunity and maybe particularly in the healthcare space at this point. And then the small cap biotechnology stocks, they've pulled back as well. That doesn't make a lot of sense to us. RFK is not going to have any impact on those stocks. Actually, he might even accelerate some of the acquisitions in that space. So small cap biotech tends to be a little bit of a canary in a coal mine. When you see the small cap biotechnology stocks pull back, that's usually a precursor for the overall S&P to pull back. So just keep that in mind, that those small companies tend to lead the market down. We think it's kind of bottomed out. So if you look over here at XBI, on a short-term basis, hit a new high. This is on a short-term basis. They're well off at their long-term high, and it's pulled back to a nice support level here. So there's tons of stocks in that small cap space that we like a lot, and that we think have good catalysts coming as well. So we like that space a lot. The 10-year Treasury, we've talked about this in the past. It blew through that 200-day moving average, got to 4.5. It may be starting to stabilize at this level. If it pulls back below 420 on that 200-day moving average, we think that will be a big positive for the markets and for those yield-oriented securities as well. So we see the yield-oriented securities starting to hold in there. The healthcare ETF XLV, as an example, is pulled back about 10%. So don't like buying things when it's below the 200-day moving average. However, it's hitting support. This might be kind of the bottom in that sector of the market currently. Inflation risk. So we've said this over and over before that to kill off inflation, you need a recession. So inflation is still out there. It's still brewing. The latest CPI report came in at 2.6%. 2.6% inflation for the overall category. If you X out food and energy, it's up 3.3%. So X out energy, energy was down 5%. That gets you the higher than the overall rate at 2.6. So it's kind of odd that taking out inflation, the inflation rate's actually higher at 3.3%. So if the Fed wants 3% inflation, we're not even close. So maybe they'll cut rates again in December, but they don't have a lot of room to cut rates with inflation hanging in there so strongly. So the inflation reports are going to be really important, and the 10-year Treasury is going to have to hold in there. Otherwise, we're going to see a pretty significant correction. In terms of wealth management, so we have a defensive posture towards the overall market on a fundamental basis. So technology is a huge weighting. Generally, that's occurs around market tops. The bond market's not really cooperating. There's a lot of turmoil that's going to occur with the Trump administration coming into place and cutting back the expenditures of the overall government. The risk premium in the market, equities versus bonds, there's virtually no risk premium in equities. So any sort of movement up in interest rates is going to have quickly a negative impact on the valuations of the overall market. Now, RFK's nomination. So Pfizer and Pepsi. These are just two that are standing out. There's more. ConAgra pulled back as well. That's a good company with a really attractive yield as well. Hershey, there's more and more. So looking at the healthcare space, so his nomination really impacted a lot of companies. The GLP-1 space, Lilly as an example pulled back. RFK doesn't like the use of these drugs to lose weight. It's not slowing down. People are going to continue to use those drugs. But you can see Pfizer. Pfizer's now at 8 times earnings. It's close to its historical lows. It yields about close to 7%. Pfizer's improving. Pfizer's turning. They've got some nice products that are coming out and a nice pipeline of products coming. So ex the COVID stuff, we see that company really improving nicely. Pepsi, we like Pepsi. Pepsi's one of the all-time great companies, and sure they sell poison, right? Doritos and soft drinks. Probably couldn't be anything worse that you can consume. But 18 times earnings, Pepsi's not going away. Pepsi's going to continue to chug along. International markets are good for Pepsi. We think that it's not quite at the recent low here in terms of its valuation, but it's getting close. So in an overall overvalued market, these type of stocks look interesting to us. We hate to keep bringing this company up as Anavex, so AVXL. We did another call with management. I got to say, we think we got a big fish on the line. So this is an Alzheimer's drug, went through phase 3. There's lots of catalysts in front of us. They have not put out a press release, but I think some of the street's understanding that they have filed for approval in Europe. So that's really good. When that comes to be more broadly disseminated, and the analysts really pick up on it and have things to talk about for next year, this is a phase 3 complete Alzheimer's drug that actually works, right? So the other two that are approved in the market, they have a very little bit of efficacy and just huge side effects, and they're not oral. So we think that this could be a really good stock. It reminds us a little bit like a Viking. As you know, we loved Viking, bought it right, and when the stock went to 14, which is much higher than when we bought it, went to $14, they did a big equity offering, and the stock took off from there. So we think the institutions are going to come into Anavex, probably kind of the same playbook. This stock's going to go into the teens. They'll probably do a stock offering. They don't need the money, but they'll probably do it, and that'll bring the smart money. I shouldn't say smart. Bring the stupid money into the stock, so the institutional money will start to pile into it, and likely see a nice move up in that company over time. We also, this is not in our presentation here, but we also talked to Veru today, and we think that things are on track there. We think that one, VERU, has some really good upside potential. They're in the middle of their trial, and we have no reason to believe that trial won't be really positive. They'll have that data come out in January. They actually had more people enroll in the trial than they anticipated, but that data should be coming out in January. Pretty sure that's going to it'll look good. So keep in mind that's highly risky. It's a highly risky company, but we like it. And they have other products that they will likely maybe do a transaction to raise some money. We'll see what happens there, but my sense is that might occur, and they won't really need much financing to do phase 3. So just in general, we want to see the market come down, work off this overbought condition, and if technology continues to be strong, NVIDIA on Wednesday, then through the end of the year, we think there's an upward bias to the overall markets. So as we keep saying after quarter, NVIDIA is really important. It's such a large part of the overall S&P 500. So thank you very much. Please hit like, come to my website, Patrick Adams CFA. Sign up for a hard copy of Market in a Minute, and we'll send it to you every week. Take care.